Hi guys, this is Teacher Party. Welcome to my YouTube channel. So we're still on the conceptual framework, and you can see, guys, it's very big. So if you have not subscribed and you like to grow in terms of counting, passing the subject, and passing it very well, please do subscribe. It's not a force, but please do subscribe so that you get the notification because I'm loading content like crazy. Okay, guys, expenses. You're still doing first year. So what is this definition of expenses? Okay, so there's two that I could find, which is the decrease in economic benefits. Remember, income, we said the economic benefits, they are increasing. In expenses, the economic benefits, they are decreasing. And it must be within the reporting period, so within the financial year, in the form of outflows. So money going out, should have highlighted that in red. Let me highlight it in red because it's very critical. These words I'm highlighting, guys, you are expected to show these words in your answers. So you can sometimes people come with different versions like of outflows. I'm like, guys, you're supposed to mention this thing as is. You write it verbatim. Okay. So we're saying it's the decrease in economic benefits during the reporting period in the form of outflows or depletion of assets or incurrence of liabilities that result in a decrease in equity, excluding owner withdrawals. Guys, owner withdrawals is your dividends and your drawings. So they can't be called expenses. That's the owner taking money for their own use, not for the business use. Yay! Okay. So let's continue to break this down. The other definition I could find, which is very similar to the first one, it says it just doesn't have economic benefits, this one. But guys, I like the one that starts from the top and then goes to the bottom. But this one also will do. It's the decrease in assets or an increase in liabilities that results in a decrease in equity. So the decrease in equity is actually the loss. Remember, income is it contributes to profits. Expenses they contribute to the loss, and it says other than those relating to distributions to shareholders of equity claims. So we're still talking about dividends. We're still talking about drawings. So decrease in assets. Let's expand on that one. Decrease in assets or depletions in asset. So this talks to non-cash expenses. So guys, I must remind you, expenses, they're not cash only. There's a cash component on expenses, as paying for stationery, cash at P&A as a business, or us paying for milk for office use, cash at Pick and Pay. That is cash. But there's also non-cash expenses. Non-cash expenses is your depreciation, your amortization, your impairment losses, like those adjustments that you're gonna be putting through to record the loss of worth or the loss of value in an asset on a monthly interval. I did mention that also the decrease in assets. The decrease in assets also, when we're talking about expenses, it can also relate to the cash actually used to pay for. Like when the office doesn't have milk, the an office for the business doesn't have milk or doesn't have coffee or tea bags, a receptionist or the driver goes to buy those at Pick and Pay, they're given petty cash. So the petty cash that was within business premises is not there anymore. So maybe you're paying for stationery delivery, for exam pads, for notepads, for pens, for rulers, for razors in the office. And then you decide, okay, you're going to be doing an EFT transfer quickly to settle that account. the bank account is decreasing, ladies and gentlemen. The salaries, you don't work in a company and hope to be paid by December, but you've started working in January. Monthly, what must go to the bank account? Your bank account as an employee, money. So salaries and wages, they are also part of those cash payments that are expenses to the business. I hope it makes sense when we're talking about the decrease in or depletions in assets when my salary is paid by the university or the school. Okay, I want to go back to work for schools. I want to work for universities. Okay, so when my salary is paid over by a university on a certain date, money comes out of the organization or the entity's account. In this case, it's a non-profit organization, which is a university or a public benefit organization. Money comes from that entity. It goes to my bank account. So does the university have more money by having me on board, or does it have less money? Obviously, it has less money. And we know that cash is a form of an asset. Cash at bank is a form of an asset. So I hope it makes sense why we're saying expenses. It's those decreases in assets, those depletions in assets. Okay, so increases of liabilities or increases in liabilities. Sometimes a business incurs expenses because they've taken debt. Remember, we were talking about, let me just show you my show and tell. Remember, we're talking about businesses sometimes getting debt and then having to pay now interest to service that debt. Sometimes you take a loan and then they say, no, there's initiation fee that you must pay for once off 1,000 rand, so you will repay it. So those are costs related to you, to the business, incurring liabilities. So these are the financial statements of MTN. You see that there's depreciation of PPE. Rights of use, we're not learning that now. The amortization of intangible assets, the impairment. So I wanted to note this when we're talking about the increase in liabilities, because the business has taken a loan, the business has taken the mortgage bond, they have to service that. So them servicing that results in expense of finance costs. I hope this makes sense to you guys. Okay, so I did like other finance costs related to acquiring debt. So like your initiation fees, once off initiation fees. Sometimes if the business is purchasing property, so the conveyancer fees, the attorney fees, and sometimes insurance on finance. Some credit, when some debt, when you get it, they say no, we can't give it to you. We just need to add 100 rand or 200 on top of what you owe us every month, so that if anything happens to you, the insurance can settle what you owe us. So effectively, if you took a loan as a business of 50,000, you end up paying 70 or 68,000 because you already have that insurance that is gonna fall off the day you pay off the debt. And it says other than those relating to distributions. So that talks to dividends paid, in fact. Not just dividends only, dividends paid and drawings. Ne? So, ladies and gentlemen, if we go back to MTN, you see it shows your revenue. I've explained all this, then less your expenses, and then at the end it talks about the profit after tax. And then the profit after tax, this is before equity is given to the shareholders of the company and to other shareholders that are a minority to the company. So that is other than those relating to distribution to holders. If you're looking at this statement of profit and loss, profit or loss, and other comprehensive income, if you're looking at it, it starts from revenue, it ends at profit after tax. Then there is adjustments now for the profit after tax. So it's not within income and expenses, it's after those. So that's why they're saying you can't include the claims distributable to owners. You can't include now the claims distributable to equity holders. Okay, so guys, let's refresh again. So this is a decrease in assets or an increase in liabilities, that's your expenses, resulting in a decrease in equity other than those relating to distributions to holders or equity claims. Or you can say it's a decrease in economic benefits during the reporting period in the form of outflows or depletions of assets, or increase of liabilities, incurrences of liabilities that result in a decrease in equity, excluding owner withdrawals. I hope you never get confused again with what expenses are in terms of the definition. Thank you guys. Bye.